Good afternoon, and thank you for joining us. I'm Bridget Anderson, the President and CEO of the Greater Vancouver Board of Trade. Today, we are gathered on the traditional territory of the Coast Salish peoples, the Squamish, Musqueam, and Tsleil-Waututh. And welcome to our Business Resiliency series, Navigating COVID-19. Today, we are focusing on financial reporting and audit implications. In this time of unprecedented uncertainty, we want to ensure that our members and the broader business community can get the answers they need to address these challenging times. Through a series of free webinars, experts will provide guidance and answer questions to help companies navigate the next step. We encourage you to take part in this discussion. You can engage with us on Twitter, Facebook, and Instagram using the hashtag GVBOT. We are also using Slido for today's discussion to allow you to submit questions. Go to slido.com and enter the code GVBOT Finance. Before we start, and in these challenging times, we want to thank our longstanding sponsors called our Pillar Partners. They include TELUS, CN, YVR, BCIT, and Air Canada. We are very grateful for their support, whose annual partnerships and commitments enable the important work of the Board of Trade. Thank you as well to our preferred media partner, Business in Vancouver. Today, we are joined by partner and BDO Global Mining Leader for Capital Markets for BDO Canada, Brendan Kidd. Brendan has significant experience with complex financial reporting issues under both IFRS and US GAAP, and specializes in companies with international operations, having developed an extensive global network of business colleagues. Brendan, I'm going to throw things over to you to get started, and then we'll come back and we'll do a question and answer period. So over to you.
Great, thanks, Bridget. Thanks for having me here. Maybe we go to the next slide. Maybe one more. So before I get into the specific issues I was going to talk about, just want to point out that this is a fully unprecedented issue that we're dealing with right now. We've never seen anything like this before, and the financial reporting and other issues are evolving so quickly and are so complicated, and everyone's dealing with them at the same time. So if you're feeling like you're alone and you need support, reach out to your local CPA or the accounting firm you work with, and they can help you navigate all the information that's coming out, because there's absolutely so much information on so many different things, and a lot of it is really complicated stuff. So do reach out to your CPA if you're feeling that you need some help. So maybe on to the next slide. So I'll talk a bit about the accounting issues. So if the company that you're working with has got a December 31st, 2019 year end that you're currently finishing up your audit for, I mean, you should count yourself among the lucky. Because of the timing of the COVID issue, it doesn't really have an enormous impact on December 2019 year ends. It's what we refer to in the accounting industry as a non-adjusting subsequent event, meaning that the events occurred after the period that the financial reporting, the financial statements are reporting on, and it's more of a disclosure issue rather than actually adjusting the numbers on the balance sheet or the income statement, that sort of thing. So a simpler issue to deal with for those dates. But once you get into January, things get significantly complicated, particularly as time goes on and the impact of COVID becomes more substantive on companies, and in particular in some specific industries that are harder hit than others. So I've kind of listed off some of the bigger issues that we expect companies to be dealing with after December 2019. So the first one is going to be impairment assessments and impairment testing, where impairment indicators have been identified. And this is going to be really complicated just because the impact of COVID on so many companies is really hard to quantify and foresee, because it is unprecedented. So this is an issue that we see a lot of companies, I would say nearly all, having to deal with, and the testing is going to be hard. In particular, companies have had acquisitions in the fairly recent past on which goodwill was recognized. Those are going to be very difficult, because when you first recognize goodwill, it is at fair value, and anything in the determination of that fair value that decreases and reduces that fair value, it'll immediately result in an impairment. So those are going to be hard to deal with. Expected credit losses. Companies under IFRS are required to factor in the likelihood that they won't receive a receivable, for example. And again, you're going to have a lot of complexity and judgment involved in determining what of your receivables might not be collectible, or at what point they might be collectible. So that's going to be hard to deal with. Modification of loan agreements. We expect this to be a very common issue where companies are going to their lenders and asking for extensions on loans or changing the terms. And these all have financial reporting implications. Government incentives everyone's accessing or attempting to. Different accounting approaches for each one of them, and a little bit difficult to deal with. And then operational items like inventory, and do you put fixed costs into your inventory when you're not creating inventory, and things like that. And many others. These are evolving issues, and the list grows longer and longer every day. On to the next slide. So audit issues. So for public companies in Canada and the US, there's some relief from the regulator in that blanket extensions have been provided for a certain period of time, and that will be revisited as time goes on. But there are other issues to consider when you're taking advantage of these. For example, if you have covenants in your loan agreements that would require you to furnish audit statements by a certain date, you'll need to negotiate that separately. In terms of audits in general, they are going to be more complicated in this environment. Things like inventory accounts, communications with third parties, even accessing documentation that we'd normally take for granted is going to be harder. So if you haven't started your audit already and you're not experiencing these issues already, it's something to anticipate and talk to your auditor about, and try to anticipate what problems might specifically happen on your audit and how to kind of preempt those. And the next slide. So final item here, I feel remiss if I didn't mention this. Unfortunately, during crises like this, the opportunity and sometimes incentive for fraud to occur increases. I don't know about everyone on the call, but I've certainly noticed an increase in phishing emails in my inbox. And the people that put these things out know that companies are circumventing certain of their internal controls to try to keep things moving when their staff are maybe reduced in size or working remotely, and they're trying to take advantage of that disorganization, as well as internal fraud. I mean, there's more incentive and opportunity for fraud to occur internally in a company. So point being here is this isn't the time to let your guard down on your internal controls. It's quite the opposite. Something you want to keep on top of during this crisis.
Those are really good points, Brendan. Thank you very much. Let's maybe start at the top there, because you mentioned that impairment issues really could impact a lot of companies here. So for many companies trying to survive the pandemic right now, they've had strong operations or financials before, but now everything has changed. Right. So what will those companies need to do now in reaction to that?
Yeah, I guess the best thing that you can do, it would depend on your internal resources. So larger companies will have their own valuations people in their financial reporting group, and they can rely on those individuals to help them to understand which of their assets may be impaired and how to do those tests. Mid-market companies may not have those same resources because they wouldn't typically need to do deep impairment tests on their assets or consider these items in as much depth. So the best thing that you can do is reach out early to a valuation specialist and talk through your specific financial reporting issues, what kind of assets you have, and the nature of the COVID impact in your company, and get their input as to how you may have to deal with impairment, and then get them to support you on the impairment test if that's necessary.
I think another thing that businesses are recognizing is that this situation is very fluid, that we have an ever-evolving situation. There's new measures coming out from both levels of government on a continual basis, and deadlines are being changed for many, many businesses. Mm-hmm. So as these deadlines are moving, what do businesses need to be aware of?
A couple of things, I guess. You know, the first is with it evolving so much, the impact at different points in time is going to be different. So the further we go into, I guess, leading up the curve, the worse the impact could be on companies. So kind of trying to understand at your specific year end what the actual impacts were, So you can factor those into your own going concern analysis or your impairment assessment. Because in these analyses, you're not supposed to apply hindsight. So if you're doing your audit, say 2 months after your year end, you don't want to be applying the facts and circumstances from that specific point in time. You want to be doing it as at your own year end. And that usually isn't a big issue for financial reporting, but when things are occurring so rapidly and changing so quickly, the circumstances could be wildly different a month later after your year end than they were at your year end. So it's important to kind of try to freeze the facts and circumstances you're aware of at your year end so you can take those into account.
That's an incredibly important point, because as things change so much, to make sure that you're documenting as you go along.
Absolutely.
Great. We're going to go to some questions from Slido. And as we do that, would like your thoughts about those organizations that have had to restructure or perhaps downsize. And there are people who are being redeployed and asked to take on other roles and responsibilities that they maybe hadn't had to do before. And so what are some of those flags, especially when it comes to your financial team?
Mm-hmm. Yeah, if people are taking on new roles and responsibilities, there's a lot of things to consider. I mean, first of all, do they have the qualifications to perform that role? And if not, what kind of support are they getting? Is there a supervisor a little more on top than they were before to make sure that they're doing things correctly? There's the cybersecurity issue that I mentioned earlier. If you have someone who's trained to be watching out for cybersecurity risks and fraud risks for their particular role, and then they're doing a different role, they might not be aware of those same risks in that new role, and it makes it a more immediate threat than it might have been previously. As well as the whole working from home or working remotely issue can be a concern for security as well, because people might be working on their home computers as opposed to their office computers. And the office computers will have all sorts of IT security built into them, whereas a person's home computer might not. So that in itself might pose a threat to a company's cybersecurity.
Absolutely. Some great points there. So COVID hit, really around the middle of March, which was in Q1. So what are the financial report ramifications for the rest of the year? You ran through some of them, but perhaps you could expand on that.
Mm-hmm. Yeah, I mean, some industries are harder hit than others. Like, for example, the tourism industry, hotels and that sort of thing, and their business for the most part completely dried up. Now, I would reiterate that impairment is probably the biggest issue that companies are going to see, and that's going to affect different companies in different ways. Going concern is going to be a significant issue for a lot of companies who've never dealt with it before. So what going concern is where a company there's a possibility that may not continue to be a going concern into the relatively short term, say the coming 12 months or so. There needs to be a disclosure in the financial statements stating this fact to the reader. And this is an issue where a lot of companies wouldn't even put a lot of serious thought to going concern, because they're a very healthy company. They're doing great, good cash flow, a mature business. But we're seeing situations where companies had their best year ever last year, and now they're potentially looking at try to push off insolvency during 2020 because of COVID. And those companies are going to need to look at things like going concern. And that can be a very difficult thing for management or for owners to deal with, because they're very proud of their business and having to state their financial statements that they might not be around in the foreseeable future is a difficult thing to get your head around. Yeah,
very, very challenging. Some questions here in regards to some of the measures that have been announced by government, and particularly the one around the federal loan, the $40,000 loan, which 10,000 of that is forgivable. What is it that businesses should be aware of in financial reporting regarding this loan?
Well, it would depend on when you receive it, when your year end is. So if this is something you're receiving after your year end, then it may not be an issue at all for financial reporting. Typically with government incentives, they're not reported or disclosed in the financial statements until they've actually been received. So if say your year end was June 30th and you managed to receive one of these loans before then you'd be recording that loan in your balance sheet and in accordance with the terms of the loan. But if your year end is before when you've actually received the loan, then you would only disclose a loan if you've actually received the funds already. So that's probably the biggest issue. And given that most companies have year ends that are early in the year, there probably won't be a lot of companies recording those loans in their current financial statements.
And what about some of the measures around rent, recognizing that government is still working this out, and we're expecting to hear more information from the federal government, perhaps this week, and working, from what I understand, in collaboration with the provinces, but around rent. So if there is deferral of rent, are there any financial reporting implications?
Well, the issue to keep in mind here is this is a deferral of rent and not a forgiveness of rent. So a company would be required to continue recording the rent as an expense during the periods of time that it's still liable for that rent. And you're simply just paying it at a later date, as opposed to being forgiven unless you've worked out a separate issue with your separate arrangement with your landlord. So
without knowing what the government measures could be, there could be an abatement, so that then changes it, of course.
Yeah, it's hard to imagine that with the deferrals of rent that everyone's going to be able to pay this. I mean, having to suddenly pay 4 months of rent when you haven't had any revenue over those past 4 months is going to be a different issue altogether. But until that day comes, I think companies would still need to accrue the liability for that rent as if they're going to pay it. And then at some point in time, it's forgiven, then they would record a gain for the turnover of that rent expense.
And what about audits? So audits require that there is in-person review or review of computer files. So how do you imagine that that's going to happen when a business has been closed due to COVID-19 and there's social distancing rules in place?
Yeah, this is a really big issue for auditors because there are certain procedures that are either required or certainly much easier if you can do them in person. And inventory accounts is one that comes up in our internal conversations quite a bit, is actually attending a company's year-end inventory count and physically seeing that count and the inventory itself is a required procedure for auditors. It's very difficult to overcome if you're not able to do that. And we're working out within our firm approaches to maybe doing this through Skype or other online platforms where you can do a virtual inventory count. And then supplement that with additional procedures, like doing a rollback or cutoff test or something like that. And I would imagine that you're going to see more auditors using online platforms to video conferences with clients where we're walking through their internal controls or things like that. But this issue alone could change the way that auditors need to conduct their audits in some circumstances, looking at different documentation or taking entirely different approaches than we might have in the past. Like if that auditor relied on the company's internal controls for the audit and can't do that internal control testing in person because of social distancing and is not comfortable doing it over a webcam, then a substantive approach, which is much less efficient, I guess you could say, would have to be taken, and that would be almost like a brand new audit, which is always a challenge.
And certainly for even outside of audits, I mean, there's no question this pandemic has changed the way that we work. Even when it comes to annual general meetings, we're seeing more and more of these being held virtually. Mm-hmm.
Yeah, a lot of our clients are planning on doing virtual AGMs as well, because I can't imagine anyone's going to get together in a room anytime soon.
I think we definitely heard the words of Dr. Henry on the weekend, where she was saying that she did not think there was going to be large gatherings over the summer. So I think that's businesses can take a page from that as they're planning AGMs and audits and things like that. A question here, I'm going to go down to the second question because we're speaking, the first question is more about general changes to normal business processes. So we're weaving that in throughout all the questions, but there's a specific question around qualifying for the 75% wage subsidy. What are, or any, if there's auditing implications?
Yeah, so this wage subsidy is a little bit outside my practice area. It's something that usually our tax folks deal with. So the specific details on that one, I'm not super up to speed on. But in terms of auditing implications on that, if I'm thinking forward a bit, it's probably more likely a 2020 issue for most companies because they would enjoy the wage subsidy during the 2020 year end. But I would expect that it would be treated very similar to other government incentive programs, which would essentially be reported like a grant or an offset to your expenses. The auditing implications to that would be relatively simple for the most part, in that you'd be looking at the documentation provided from the government and the terms of that subsidy, as well as making sure you see the cash payments coming in from the government.
Great, thank you. And recognizing that still, I think the application process is open, but businesses have not yet received those funds. So can you let us know about some processes that we should do now to ensure that we're prepared should we be audited after? That's a great question, because things are changing so rapidly. So what are some of those preparatory things that businesses should be doing?
I think the best thing you can do is ensure that all of your day-to-day documentation is available in some sort of electronic format that can be shared via the web through a portal or email if you have a portal available to you. If you have a lot of paper documentation, if you've typically had an audit where the auditor is actually going to your file cabinets and looking at physical contracts and things like that, it's probably not going to be an option for you this year if your audit's occurring in the next couple of months. So you should start working to getting that documentation scanned in and available for your auditor when the time comes for your audit.
And that could be a pretty big job for some smaller businesses, especially.
Absolutely, yeah. Like, a lot of small businesses keep everything in a box and they'll deliver that physically to their auditor for their work. And we still have some clients doing that, and us, as well as I'm sure most other firms, have processes that if that's the only option that we have admin teams that can scan the documentation in. But it does add a lot of time to the audit process. So where you might deliver that box normally and your auditor can start next week, it's probably going to be several weeks to a month before that documentation has had time to get through the queue and be scanned and prepared for your audit team to look at.
Well, and I would be concerned about security, which somebody has brought this up here. If you're scanning a bunch of documents like this, how do you ensure that this is going to be secure and that the information will be shared through a secure line with the auditor?
Yeah, absolutely. I mean, that's an issue with a lot of online sharing platforms. Like I've heard things like Dropbox, for example, aren't necessarily as secure as you might think they are. So a lot of firms, including ourselves, have set up their own online portals that are fully secure, and we discourage clients to send things by email. We encourage them to instead put them onto our portals, and that way it's easier to track it for audit purposes, but also the security of that data itself is much better than emailing it or sending through Dropbox or some other format.
Great, thank you. Now, how should we report source deductions if we're not making, I think this says we're not making the payment, but just want to report for the current period?
Yeah, again, that's more of a tax issue.
Okay.
So I think I'd have to check with my tax guys before I respond to that question.
Sure. Okay. Granted, we'll leave that one for another day on another webinar. Thanks very much. Good question here about, though, the deadlines. Is there a chance that audit requirements will get postponed or changed, or is it still business as usual?
Yeah, I mean, the audit requirements won't change. I mean, that's something that our national technical team has been repeating to us every time that we're speaking to them. As audit quality is of the utmost importance. There's a temptation to kind of take less than we would normally ask for during an audit, but it's important that the quality of our audits remains very high, and I think all firms would agree with that. So I think it is business as usual in terms of how or where auditors want to get to with the quality of the work that they've done. It's just how we're going to get there might be a different route than we may have traveled in the past.
Would it make any difference if a company has multiple offices globally outside of Canada?
Oh yeah, absolutely. That opens a whole new can of worms. I mean, one of the audits I've been working on over the past few months has offices in a number of different countries around the world, and we were kind of dealing with that as COVID progressed, and you were having more and more countries kind of putting in curfews or other restrictions, and we'd have issues come up where everything is fine here in Vancouver, but suddenly our office in another country has said, oh, we just found out today we can't come to the office anymore, and they're scrambling to understand how they're going to access documentation from their clients. I think most countries at this point are already under some sort of curfew, and so they're working on ways around that already. But if you were working on audit with a country that's been fortunate enough to be exempt from that so far, it's something to certainly keep an eye out for, because literally you could just have one morning wake up and there's an email saying that we can't get documentation anymore.
Absolutely, and I think as we're listening to the experts, they're talking about the potential of a second wave. I think that's really important to note that. We have time for 2 more questions, and so just want to find out here, there's a good one about accepting online orders. So a company has accepted the online order, but has not sent out the goods yet because operations have been shut down. How does this affect the physical count?
Yeah, I mean, this is a pretty common issue for inventory counts. I mean, even in non-COVID times, you could have this happen. And what typically an auditor and their client will do is count what inventory is physically on hand at the end of the year, and then we'll reconcile that to orders in progress, and even orders that have been shipped, but that shipping terms may dictate that the revenue can't be recognized until it's actually physically received by the client. So the year-end inventory balance and/or revenue balances would be adjusted for those orders and items in transit.
Great, and maybe we'll address these last 2 questions together. There's a question about multiple revenue streams, but really I think the broader question is whether you can recommend any resources for businesses who are looking at this really uncertain time over the next several months and preparing for their fiscal year end, and really then thinking about what they could do, or resources that you would recommend as they prepare for what could be a potential audit.
Mm-hmm. I mean, I think if you're unsure where to start and what issues you might have, I think the first place to start is to have a discussion with your auditor. Sit down and look at the draft numbers that you have for the year, and what's changed, how the company's been impacted by COVID, and get their input as to what the impact might be in the financial statements. And this would be best practice under normal circumstances, but absolutely vital in this environment, because I'll tell you, there's a lot more issues affecting companies than most people would pick up on the first pass, and these are evolving constantly. So your auditors will have good resources available to them, and they'll have a lot of great input for you on your specific financial reporting implications.
Brendan, really thankful for your advice here. You've been really helpful as lots of businesses are preparing for their fiscal year end. So thank you very much for your time today.
Yeah, absolutely. Thanks very much for having me.
Well, you can watch this webinar again. Please visit theboardoftrade.com and go to our COVID-19 page. And we would like to continue this important conversation and stay connected. We are going to continue with our series of free webinars on navigating COVID-19. Over the next few weeks, we'll be bringing together experts to speak on navigating labor and employment law, cloud computing, and the Minister of Jobs, Economic Development and Competitiveness, the Honorable Michelle Mungal, will be joining us. We have also created a business resource page designed to provide information and toolkits for businesses to navigate the challenges of COVID-19. You can find it at boardoftrade.com. This page will be updated as new information becomes available. Thank you to everyone who took time to watch today's webinar. We look forward to connecting again soon, and to echo the words of Dr. Bonnie Henry, be kind, be calm, be safe.